My initial thought is that's clickbait. You know what I'm saying? There's just not enough data that suggests home prices are going down.
Hello, everybody. Welcome to Mortgage Minute. So, if you're new to this show or have been with us the whole time, you should know that this is not a show about interest rates. Our focus is helping potential homebuyers understand the mortgage world as it pertains to buying a home. And therefore, we focus on data over drama, facts over feelings, if you will. So, our goal is to provide education about the home buying process from a real estate and mortgage loan perspective while providing you with the truth about these markets. So, who are we to offer such advice? Well, my name is Matt Thomas. I'm a local realtor. I have been for over 13 years. My co host is Brian Daywald, a highly acclaimed local mortgage lender in his 20th year. And both of us serve the Denver metro and surrounding areas. Now, today we're going to look at a few real time topics that are most poignant for home buying in today's market so that you can make best decisions for you and your family if you're considering buying a home in the near future. We're going to be covering some new territory. The markets have been doing some really positive things, more positive than we've seen in a while. Brian, why don't you tell us what's going on?
Yeah, thanks for the wonderful introduction as always, Mr. Matt. So this week we're Thursday, July 13th, 2023, and just this week the mortgage market has improved 200 basis points, which is 2%. So that doesn't
That's
mean
insane.
rates have fallen 2%. It just means the cost has gone down. And I loved your intro that we're not here to talk about rates, but it's more sort of market conditions. So this is a really nice and welcome week on the heels of a pretty ugly week last week. Thursday and Friday last week, we got beat up pretty good just based on some really odd employment data that came out. And it seems like they're, moving the needle a little bit every time they come out with that report where,
Mm.
it's different information that gets into there. So it's super frustrating because it has a really big effect on what's happening with mortgage prices. Luckily, this week, we finally, I think we're about 60 days behind schedule, but I think we're finally starting to see some of these inflation factors become, part of what we're seeing with these improved prices. So, we expected to kind of see this back in May. And,
I remember, yeah.
yeah, and, between just curveballs that we get thrown between, again, unemployment or employment data, the debt ceiling thing had a big, you know, crimp on improving, even though we saw some better inflation numbers. So anyway, CPI and PPI both came out this week. There's a PCE report I think that comes out next week or the week after. So we're crossing our fingers that we're sort of past the peak. And like I said, we've seen some monster improvements this week, so it's been really great.
Well, that's right. I mean, I'm sure a lot of us are still feeling the crunches of inflation. I mean, it's not like it's gone away by any means,
Right.
but the data that's being reported right now, there's because of the delay you mentioned, there's some improvements, and that's in comparison to the year prior. Is that right, Brian?
Yeah, and it's interesting because there's, all of these, who knows how they're kind of coming up with some of this information. And a lot of it's, delayed, housing makes up a monster part of CPI. We've talked about that before, but the people that are looking at this data can't really determine when they should look at the housing data, even though it's the biggest component of CPI. Anyway, it's just goofy in how they, come up with all of this stuff. But
Sure.
like I said, luckily this week it's been favorable for us on the mortgage side of things.
Well, we've said over the years, I mean, generally speaking, mortgage rates follow the trend of inflation. And so
Correct.
when you see inflation come down, you expect that rates will come down. And this week, obviously, there's been market improvement, which is that's a direct correlation.
Correct.
But, sometimes when we've been expecting this and we've seen CPI come down, and maybe or the inflation overall, it's there's other news that's kind of messing that up and kind of interfering. It's ultimately about market reaction, and the market reaction is that's what's really largely dependent upon the inflation numbers. But if there's something else going on that's skewing those numbers, that's I'm sure why we end up all over the board.
That's right.
Brian, there was an article recently published in Forbes that was talking about rate predictions, and I don't like to get into that too much because
Right.
the internet's full of places you can go to, find the story that you're interested in or the one that fits your narrative, if you will, better than any. But it was interesting because I've heard several people bring it up, and this Morningstar out of Chicago is a finance company that was talking about seeing rates potentially fall into the fives next year in 2024 and then into the fours in 2025. And I thought that was interesting because one of the things they said what that was based on is house prices falling. But I just saw another article this week that absolutely talked about that being the opposite being the case. In fact, that in May it was reported that a lot of markets had gone back to peak prices. At least some major markets have gone back to peak prices or are starting to exceed them.
Yep.
And we are seeing multiple offers because of the low inventory. So, Brian,
Yep.
what's your thought on that?
I mean, my initial thought is that's clickbait. You know what I'm saying? There's just not enough data that suggests home prices are going down. There's people all over, Wall Street and DC and everything else that have told you since 2015 that you shouldn't buy a house. It's not the market for it. So even as recently as 2020 and 2021, right? Like everybody that bought a house in there just made tons of money. So anyway, like I said, I think it's clickbait. I think that there are, right, like everybody can be a predictor of the future, right? And nobody's crystal ball is crystal clear, right? So, I think that there's a general consensus that mortgage rates are going to go down at some point, and whether that's this year or next year or the beginning of 2025, nobody really knows. But I think that we could see that. If and when we see that, that is going to help home prices, right? It's not going to be one where, like, if prices are flat now or increasing just a little bit, which we're seeing, right? There's no way that a bigger buyer pool is going to have home prices go lower. It's just, like I said, it's clickbait. I don't see any data that suggests home prices are falling. In fact, I'm seeing the opposite. We've talked about this on our show here before, where, people that are comparing our current situation with the situation back in 2007, 2008, 2009 is a whole different story, just in terms of population numbers and inventory numbers, right? We call that Econ 101 is just supply and demand. So right now there's way less supply, about 10%, believe it or not, than there was in 2008. And the demand is higher, right? There's all kinds of data that we can pull up to show that the average home buyer is 33 years old. In 2008, that was the lowest number of 33-year-olds. Since they started keeping track. Right now, there's more 33-year-olds than ever since they started keeping track, and that trend is going to go up as far as the population goes. So anyway, lots of data there that suggests that home prices are going to remain going up. More population, less inventory, lower interest rates. It's a recipe for higher home prices.
Sure, and the fewer people that are actually selling now is just going to increase the numbers of people who are going to want to do that in the future. So they're holding out, they're waiting, they love their interest rates, but eventually life will happen. They're going to have kids, their family's going to get bigger, their family's going to get smaller. There's going to be, birth, death. There's going to be, job changes and all different types of things. You can list several of them. And ultimately people are going to want to make changes in where they live. And so they're going to sell even if they have a 2.75 interest rate. And they'll do it in any interest rate environment. But right now, the people who don't have to are not, and that's what's causing this dearth of inventory. But the longer that trend, while rates stay high, the more pent up demand it's going to create. And so sellers have got to ultimately decide to liquidate properties and jump into the buying pool themselves. So when that happens, prices are absolutely going to go up. So. Another good, I think, tidbit for while we never tell people, we're never encouraging people, generally speaking, to just jump in the market whenever. You've got to talk to the two of us and see what makes sense for you in your particular situation. But those are the overall conditions right now that we're seeing that point to things being even potentially tougher to buy, maybe a better interest rate, but then more competition, and we'll be back in where everyone's fighting for a property, and it just pushes prices up.
Agree 100%.
As always, let us know if you have any specific questions that are specific to you and your needs. We are here to help you navigate our current market and the conditions that we're facing, good or bad or indifferent. But anyway, appreciate the good positive report. It's always nice to be able to jump on and share that things have moved in a very positive direction and took a large step, which is fantastic. So please reach out to us, and we will see you next time. Thanks, Brian.
Thanks, Matt.